Hey everyone, welcome back to Corporate Decoder, the place where we try to untangle the financial web of publicly traded companies and find the juiciest bits because, let's be honest, reading these reports can be drier than toast without butter, but we're here to change that today. We're diving into the latest filing from Oncotelic Therapeutics, Incorporated, a company that has been making waves in the biopharma space, but also facing some serious challenges. You are not going to believe the numbers we found in their financial statements and the bold moves. They're making it is a story of hope, big risks, and a whole lot of cash burn. Stick around, because this is going to be a wild ride before we dive deep into the numbers. And the drama, make sure you are subscribed to the channel if you love getting these easy. To understand breakdowns of complex corporate filings, we break down what matters so you don't have to. And if you want to join a community of like-minded investors and dissect these reports together, our Discord link is in the description below. Alright, so this document is a registration statement. This is basically a company telling the Securities and Exchange Commission, or SEC, that they're ready to sell more of their stock or allow existing shareholders to sell their stock. And it is packed with information about the company's current state, its plans, and importantly, its financial health. First off, we have Oncotelic Therapeutics, Incorporated, formerly known as Oncotelic. You'll see them listed with the ticker symbol OTLC on the OTCQB market. Now, this filing is about selling a lot of stock, specifically over 309 million shares that may be offered for resale by Mast Hill Fund LP, which they call the Selling Stocko. Elder, this is a massive number of shares, folks, and it is crucial to understand where these shares came from. They were transferred to Mast Hill in connection with a note purchase agreement and an equity purchase agreement. These agreements are like deals where Mast Hill is essentially buying a lot of Oncotelic stock, either directly or through converting debt, and the company is registered in these shares so Mast Hill can sell them to the public. Now, this is a big deal. 39.1% of all the company stock could be sold. That is almost 40%. Imagine if your landlord suddenly decided to sell 40% of the apartments in your building. It could really shake things up, and that is exactly what can happen to a company's stock price. When that much stock hits the market, it is called dilution, and it can make existing investor shares worth less. The company's stock is traded on the OTCQB market, and on the 17th of November 2025, the price was $0.0850 per S-hair. That is a pretty low price, and it tells us something important. This is not a drill when a company says an investment involves a high degree of risk. It means you could lose all your money. They even say you should only purchase the stock if you can afford a complete loss of your investment. That is serious. You need to understand why they're saying this. Let's get to the numbers, the juicy part of this filing. The financial tables tell us about the company's health. Looking at the balance sheet for the 30th of September 2025, we see the company has about $409,000 in cash. That is not a lot for a biopharmaceutical company, and it has been a bit of a roller coaster with cash balances previously higher, but recently lower. Their total assets are around $28 million, but a big chunk of that is an investment of over $22 million in something called GMP Bio. This is their joint venture, and it is a major part of their value, but also a source of uncertainty because they only own 45% of it, and their liabilities, specifically accounts payable and accrued liabilities, are over $2.5 million. That is money they owe to suppliers and others. Now, this is a critical number. The accumulated deficit is over $39 million. This means the company has lost way more money over its lifetime than it has earned. It is basically a running tally of all the losses since the company started. Moving to the statement of operations, which shows their performance over time, we see for the 9 months ended the 30th of September 2025, a net loss of over $1 million. This is a loss of over $1 million for just 9 months. Keep in mind, this is after accounting for the cost of running the business, research and development, and general administrative costs. Their general and administrative expenses were over $650,000 during this period, even without any revenue coming in. Now, look at the 2024 numbers for the full year 2024. The company reported a goodwill impairment loss of $3.2 million. This means that an asset they previously valued on their books turned out to be worth much less than they thought it was, and they had to write down its value. That is not a good sign for the business's perceived value. For the full year 2024, their loss from operations was over $3.5 million, and for the year 2023, it was even higher at over $6.6 million. And they're paying a lot for interest on their debts, over $640,000 in interest alone for the 9 months ending September 2025. That is money that could have gone into developing their drugs. Now, let's talk about the risks. This is where the company spells out exactly why you might lose your shirt investing here. They openly admit their main asset is their minority stake in that joint venture GMP bio, which makes it hard for investors to understand the true value of the company. This is a doozy. They literally say they need substantial additional funding, or they might have to close down shop. Their cash on hand is very low and their liabilities are very high. They are heavily reliant on selling more stock and debt to stay afloat, which means more dilution for existing shareholders. They have this thing called an equity purchase agreement with Mast Hill where they can sell stock to Mast Hill at a discount. Remember, we talked about that with 39% of the company potentially being sold at a discount that is going to hurt the stock price for everyone else. When you look at their management discussion, they reiterate these points. They are burning through cash. They need money, and their ability to continue as a going concern is in doubt, which is fancy accounting talk for. Are they going to survive? Let's check out the team leading this company. Vuong True is the chairman and CEO and has a big stake in the company directly and indirectly through Oncotelic Incorporated, another company. He is involved with Stephen King, is a director and consultant with a strong background in biotech manufacturing. And Anthony Mader is a director and chief medical officer with extensive experience in clinical development of immunotherapy. Interestingly, for 2024 and 2023, the named executive officers reported zero salary bonus or stock awards. This is because the joint venture GMP bio is covering their compensation, a common practice when a company is conserving cash, but it also shows how reliant they are on that JV for their ongoing operations. Looking at who owns the stock, Vuong True owns a significant chunk, over 30% of the company directly and indirectly through Oncotelic Incorporated. And other interests, this concentration of ownership means his decisions have a huge impact on the company. Other large shareholders include Balaji Bhaktalan and Chow Xiao. It is worth noting that the board has determined none of the directors qualify as independent. This means most decisions need to be scrutinized by investors, as there is a higher chance of directors potentially favoring related parties. They also have master service agreements and license agreements with Oncotelic Incorporated, a company partly owned by their CEO. These related party transactions require careful monitoring. They mentioned that on the 17th of November 2025, about 186 million shares are held by non-affiliates and available for resale. Others are restricted securities, which is important for understanding how much stock could flood the market. And here is that crucial bit from their auditors, Rose Snyder and Jacobs LLP. They also expressed substantial doubt about the company's ability to continue as a going concern, repeating that warning you saw earlier. One of the big audit matters is the evaluation of goodwill for impairment, as we saw the company recorded a significant impairment charge of $3.2 million in 2024. This means the value of the goodwill they recorded from past acquisitions has dropped a lot, probably due to the company's poor stock performance. And this is why you always check the auditor's report now for our take on Oncotelic Therapeutics. Incorporated. So what is the story here? Oncotelic is a company in the very high risk, high reward biopharmaceutical sector. They have some interesting drug candidates like OT-101 and Oxy 4503, and they've formed a promising joint venture GMP bio that could be worth a lot. But there are massive red flags first. The financial situation is dire. They are losing a ton of money, have a huge accumulated deficit, and very little cash. Their survival hinges entirely on securing more funding, which is never guaranteed, and when they do get money, it often comes with severe dilution, like the deals with Mast Hill and Peak One that mean existing shareholders own a smaller piece of a potentially less valuable pie. The company acknowledges its own risks, repeatedly stating they might have to cease operations without funding the goodwill impairment. Is a clear sign that past acquisitions or the market's current valuation of the company isn't matching what they thought it was worth. This isn't a company for the faint of heart. It is a speculative play where you are betting on their pipeline, their JV, and their ability to navigate the extremely difficult biopharma landscape. The good news is they have some strong names on their board and a JV that is progressing. But the financial reality is stark. They need a miracle or a massive cash infusion. You are essentially betting on a turnaround with immense risk involved. Alright, that is our breakdown of Oncotelic Therapeutics Incorporated's latest filing. What do you think about their financial situation? And their future prospects? Are they a diamond in the rough or a ticking time bomb? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more corporate investigations, and don't forget to join our Discord community linked in the description for more in-depth discussions and to connect with fellow corporate decoders. Thanks for watching. See you next time.